Welcome. Hello, my name is Lisa Judge. I manage the advice and education team here at Active Super. So, thank you for the people in the room who have heard this before. It has been a big acknowledge the traditional owners of the country where we meet today, which is the Darug people, as well as the sacred land that each of you are on, and recognise the traditional owners' continuing connection to land, waters, and culture. We pay our respects to their elders, past, present, and emerging, and acknowledge all Aboriginal and Torres Strait Islanders joining us today. Our annual members meeting is a chance for you to hear from the Super Funds board, as well as the executive team, and provide you with an opportunity to ask questions. Firstly, tonight, you'll hear from Kyle Loades, Chair of the Active Super Board. Kyle will share some opening comments, introduce you to our board, and as well as that, an overview of other fun news. We will then hear from Phil Stockwell, our CEO, who will provide an update on the fund and key achievements through the year. Phil will hand over to Craig Turnbull, Chief Investment Officer, who will provide an overview of your super's performance and the markets for the 2022 financial year. He will also share some insights into some of the investments we make on your behalf. Following this, we'll hear from Moya Yip, Head of Responsible Investment. Moya will provide a summary of Active Super's responsible investment approach. Moya will then hand over to Chantal Walker, our Chief Member Experience and Growth Officer. Chantal will focus on the services delivered to our members in the 2022 financial year, as well as some new enhancements we have made for our members. And then it's over to you to ask questions. If you're joining us online, you can ask questions using the Ask a Question function at the bottom of the pane. For those here with us this evening in Parramatta, we will have roving microphones available for you during the Q&A session. Please note that the presentations will include financial information and performance results to 30 June 2022. All financial information relating to the 2022 financial year can be found within our latest annual report, which is available on our website. Today's presentation will contain factual information only. We are unable to give you financial advice about what you should do in your specific circumstances. You should consider personal, tailored advice prior to making any financial decisions. I'd now like to hand over to Kyle Loades, Chair of Active Super.
Thanks so much, Lisa. Good to be back again, eh? Can't have too much of a good thing. I would like to acknowledge the members who are physically here at Parramatta and also to you online. It's great that we can utilise technology, as challenging as it can be sometimes, that enables people, particularly from areas all over the nation, to take part in this. I believe this is the first time we've had our annual members, and I did speak to one Parramatta who assured me this is the centre of the New South Wales universe, and it is amazing how much Parramatta has grown as we drove into here. I also met other members who, in their council working life, an engineer, a librarian, people working in the parks, and also in the pools area. And I must struck me was just how important the role of local government and our councils are in our communities as employees and our members in those roles in the past or currently still working there. So we thank you for that. And at Active Super, we like to think that we work just as closely with you in our communities to look after not just your interests, but that of our broader community. I'm very fortunate to be joined today by our board. I'll introduce shortly. I'll introduce Phil Stockwell and the executive team, and also many of our employees are here but are also online. We welcome you also from all over the state. I'd like to acknowledge our actuary, Richard Boyfeld from Mercer, and our external auditor, Rita De Silva from EY. The last year, we did briefly introduce Councillor Nathan Hack, who filled a vacancy left by Councillor Dom Figlimenio, whose 4-year term came to an end. Now, all of our board members have very diverse backgrounds and experiences, and Nathan is no different. He adds up to a great book. Nathan is a councillor of Liverpool City Council, treasurer of Local Government New South Wales, and chair of the Western City Migrant Resource Centre. But in addition to has a really extensive executive career in technology and investments across a multitude of organisations so relevant to financial services and in particular the superannuation industry that we're in. Very strong strategically and a down-to-earth person and a great fit. So Nathan, we acknowledge you and we've enjoyed working with you in the last year or so. I'll introduce the rest of our board shortly. I just want to move on to our successful rebrand. It was a massive undertaking to rebrand, and there were various reasons for the rebrand, but I want to acknowledge government superannuation as a brand and that linkage with local government. It was so important that any new brand maintain that heritage, which we believe we've done, and being able to talk to you and liaise with you helps reinforce that for us. But the new brand has just gone so well all over the nation. They're joining from Darwin to Perth, Tasmania, along with many Wales, from a whole. We're one of the few funds that's growing net positive. So that's a really important statistic for longevity as a fund. So the more new members we to join with you as really does help the future success. Thank you to our members who've joined us on that journey of the brand, and thank you and have joined in the last year or so. Thank you, thank you, thank you. I do want to move on to a merger discussion. Last year we mentioned we'd been talking to Vision Super about a merger. I want to talk about that a bit more. It's progressing really well. The background was that we could have probably got by for many without a merger, but when you started to look at the potential upside of it became a bit of a no when we started to analyse and started to look at what else is going on in the other industries. There was only one that stood out, and it was Vision, and many reasons include it's like our brother or sister fund in Victoria, local government heritage, a defined benefit system, members that aren't just in capital city, but indeed all over the state and other states, and a culture that is so similar to what was local government super, now Active Super. It really was a no-brainer. But you don't merge just for the sake of it. There has to be tangible benefits to members, and when you look at inflation effect on your life, cost of everything's going up. Well, it's the same for a fund. So you need to be able to manage, cover those costs, and a merger enables you to have increased funds to invest in new products and services, technology, and equally important to hopefully continue to reduce fees, which are very important. You know, for every dollar less in fees, you know, that's more funds that are growing and with a greater return. Late last year, we got to the stage of what we call due diligence, where the theory of what it could be starts to get checked off, with the checks and balances, and we've got past and approved that. So we're now continuing to explore the merger, and we're now at a phase. Well, how will it work? What will it look like? We will continue to let you know of our progress. Mergers can take more than a year or two sometimes, and that's where it's looking to play out. But we'll take you along on that journey, absolutely, in terms of communication. I do want to thank our board, and first of all, our two deputy chairs, Karen McEwen, who's an employer nominee, and Craig Peat, an employee nominee. I work closely with all the board. Two deputy roles support me very closely in weaving through all of the ongoing challenges and growing a fund. So I thank both Karen and Craig. Two independent directors like myself in Claudia Bells and Sandy Orleo, employee nominated director and Greg McLean, and employer nominated director Declan Clausen and Nathan Haggerty. I'm very lucky to, as a chair and as a board member, to be able to compare and contrast the boards that I'm involved with. Say this, that you have before you a very professional board that worked and are very enthusiastic and passionate about and growing the fund so that we can achieve all the good things that you'll hear about from Phil shortly. You have a great board for you. Thank you to my fellow board. Now time to acknowledge our important team. There's about 100 staff, and Phil Stockwell is the CEO of the team that work the state. We have a great culture. I love walking at all of the branches, saying good day to our employees, and you instantly pick up their genuine passion and interest and knowledge in progressing your interests. It's such an enjoyable experience to work with you, our employees. I also want to thank and acknowledge our shareholders for your ongoing support, Local Government New South Wales, the USU, LGEA and DEPA. We work very closely with all of our to further the interest of the shareholder organisation and their members. Now, this financial year, and I mentioned to me earlier, we've been around longer than 25 years, but it's 25 years we celebrate as local government and now as Active Super as a fund. It's a great milestone. Many super funds haven't stayed the course. It's been too tough. We're really proud that we're here before you. And I want to thank you, our members, for supporting us, to staying members, the previous members and our new members, for trusting us with your superannuation and retirement savings, hopefully, indeed, for the next 25 years. I'll now hand over to our CEO, Phil Stockwell. Over to you, Phil.
Thank you, Kyle, and thank you all, everyone here and everyone for their patience. I'd like to welcome you to our annual member meeting for the year-end financial 30 June 2022. It gives me great pleasure to be here today and update you on the achievements of the fund, and it's a great opportunity to do that and also to meet the members and also to answer your questions. This is my fourth annual member meeting, and before I begin, I would just like to, like Kyle, thank the members. Some of you, particularly the ones who've joined us here tonight, also the ones who are watching online. Some of you have been with us a long time, and others will have joined recently. And to all of you, thank you for your support. Okay, the technology clicker's working, which is good. Firstly, I'm going to talk about a quick snapshot of the fund. We are a profit to member industry super fund, managing over $13 billion on behalf of over 81,000 members. The largest part of the fund that you'll see up on the slide, the largest part of the fund is the accumulation scheme, which is generally people who are working and saving for their retirement. We also have a significant number of members who are in the account-based pension scheme and products, and they're generally retired and drawing an income from their retirement savings. And the third large group you'll see on the slide are members of the defined benefit schemes, And we manage these schemes on behalf of local government employers and members across the state. So moving to a bit of a review of the year, and there's a lot to review. So we've just picked some focus areas of topics here. So it's been a busy year. It's been one which is challenging financial markets, and also one which has had a rapidly changing industry structure. As always, though, our objective is to deliver strong outcomes for our members. And that's what we focus on, and that's what the team focuses on. Some areas we're going to highlight tonight in terms of achievements, focus on investment performance and delivering that in a good value way. That is the core function of a superannuation fund. We also to continue to invest responsibly. It's a long-standing commitment of the fund, and we'll tell you a little bit more about how we do that. We continue to improve service and support available to our members. Now, online and digital engagement is becoming a much bigger part of what we do, but also face-to-face is still the core and the bedrock. And so we have, you'll hear about our team, both here in Sydney, but also in metropolitan areas and regional areas across the state, serving our members and our employers. And of course, the last one, and this is an emerging one, is focusing on retirement and retirement income. So we're helping members prepare for a comfortable retirement to help members make better financial decisions so that when you do retire, you've got the maximum amount. So how do we go against these things, and what have we achieved through the year? Okay, so starting with performance, the 12 months to 30th of June 2022, that was tough in global financial markets, and that translated into investment performance. But fortunately, things have improved since then. And over the long run, which is what superannuation is, it's a long run, you're in superannuation for the long term, performance remains strong. You're going to hear more about this from Craig Turnbull, our Chief Investment Officer, but some of the highlights on this slide include passing the APRA MySuper performance test. Our account-based pension product was rated platinum by the ratings agency Super Rating. That's the highest rating you can get. We achieved a AAA rating from another rating agency called Rainmaker for our accumulation scheme and our account-based pension. And hot off the press, we've just received a Canstar 2022 Outstanding Value Award. Moving on to responsible investment, it's been a long-standing commitment of the fund, as I mentioned. Some of the recognition from third parties, which is on the slide, we've been recognised as a leader in the 2022 benchmark report by the Responsible Investment Association of Australasia, to get that right, otherwise known as RIA. We're a highly ranked ESG fund in Rainmaker's 2022 Leaders rating, and our shopping centre portfolio is highly ranked in the NABERS, which is NABERS Sustainable Portfolios Index. So you're going to hear from Moya Yip, our Head of Responsible Investment, who'll share more about our approach shortly. Moving on to service and support, this year we maintained a high level of face-to-face member and employer servicing and support, and it was a great relief after COVID to be able to get back out in front of our members, with our employers, and delivering that service. But also our in-house contact centre, which is here in Sydney, take calls and emails and online chat. We also have client relationship managers across the state, and also financial planners in many metropolitan and regional areas as well. We measure member and employer satisfaction on a regular basis. And as you can see from the stats up here, it's still at healthy levels, which is great. This year, we continued evolving our digital experience as more members choose to interact with us in an online format. Importantly, and we've heard a lot about cybersecurity, importantly, we've got multi-factor authentication or two-factor authentication on all of our accounts now. When you log in, this is where you have to get a message with the number, and then you put that in. And it's about ensuring that there's good security and protection on your accounts. Our Chief Member Experience and Growth Officer, Chantal Walker, will give you more highlights on service and support a little later on. And then moving on to retirement. One of the main purposes of the superannuation system is to provide you with income for retirement. It is therefore one of the key functions of a superannuation fund to help members prepare for that comfortable retirement. And we've been doing a lot, and there's a lot of activity in this area lately. As shown on the slide, I mentioned earlier, our account-based pension product received the platinum rating from Super Ratings. We published what's called a retirement covenant, and this essentially outlines our retirement strategy, and that's available on our website. And some of the things we've been doing to further that strategy, we've recommenced our retirement seminars. So these are face-to-face seminars with our members, helping them think through that pathway to retirement. And for example, the team were at Fairfield Council yesterday and today with retirement seminars. And lastly, they're exploring a new partnership to assist members to get help and access so that you can maximise your Centrelink entitlements. The team who make all this happen is shown on the screen. The executive team, it's managed by an experienced and diverse team who are dedicated and hardworking. We have leaders in here at the fund who've been in the superannuation industry for a very long time, many of them over 20 years. We also have relatively newcomers who've come from outside of the industry and brought experience, and some from outside our fund and also outside of super. I would like to acknowledge the executive and all of the staff at Active Super. This year, they've worked together to make these achievements happen, and I'd like to thank them all. We have many staff here tonight, and so please take the opportunity to chat with them after the presentation. So in closing, I would just like to acknowledge the board for their hard work and ongoing service for our members, acknowledge our shareholders for their support during the year, and then, of course, our Active Super members. We appreciate the trust that you place in us to manage your superannuation, your insurance, and your retirement savings. That's something we take very seriously, and we will continue to work hard to deliver member outcomes for you. It's now my pleasure to introduce to you Craig Turnbull, our CIO. Craig's been the CIO since 2008, and he's managed the fund with his considered investing approach. And Craig's seen many ups and downs. And to update you on the investments for the year, Craig Turnbull.
Thank you, Phil. Good evening, everybody. I'm Craig Turnbull, and I'm Chief Investment Officer at Active Super. And it's my pleasure to give you an update on your investments tonight. Now, the last financial year has indeed been a very tough year for super. The average balanced option in the industry was down 3.3% for the year. We had to cope with the war in Ukraine, rising inflation, and rising bond yields. Now, losses are not nice, but they do tend to happen every 5 years or so, so we should be prepared for that. This chart here is for our accumulation returns for 3 different periods. The dark bars are for 1 year to June 30, 2022. And you can see those bars are all negative, with each of our blended options down in the 2 to 3% range for the year. Even the managed cash was down a little bit. The green bars are for 5 years. They're 5 years to June, and they are all positive. And finally, the pink bars are the 10-year returns, and they've all been good over that period and well above inflation. So these results are helping to build the long-term purchasing power of your retirement savings. Next, I'm turning to the returns for the account-based pension. These funds have the same investments as accumulation, but they have a different tax treatment. And this tends to help the account-based pension in the long term, and so they get a higher return over time. However, in a lost year, such as last year, the return was actually lower by a little bit than the accumulation. Next, I'll move over to the retirement scheme. And you'll notice that these returns are very similar to accumulation, as they have similar investments and the same tax treatment. Now, the good news. The returns for this financial year are going a lot better. This is an update for the accumulation options, and it's how they're performing for the 8 months to the end of February, and all positive. And I can also tell you that so far in March, we're off to a slightly positive note as well. So looking a bit better this year. Now, super is for the long term. So you don't need to worry about all the little downturns along the way. This chart here I'm showing is a long-term chart of the Australian share market. You do get downturns like last year. If you look at the end of the chart on the right-hand side, you see that downturn. But there's been others as well. There was the COVID crisis in 2020. There was the GFC in 2008 and the tech crash in 2002. So they come along, but the market tends to recover and trends up over time. And the reason for that is the stock market is driven by the growing economy and rising company profits. Active Super is a fund that tries to ease the pain of the downturns by diversifying the portfolios. So this chart shows you where we invest your money. We do invest a lot in the share markets, as you can see on the right-hand side, the Australian shares and the international shares. But we also invest in other assets, such as bonds, property, private equity, and infrastructure. And in these areas, they can give you good returns even when the share markets are down, such as last year. And we've circled a couple of regions there that we're going to look into a little later in the presentation, the private equity and the infrastructure. This chart shows the 1-year returns for the different asset classes that we invest in. Last year was so difficult because all of the big public markets like bonds and shares and listed property were down substantially. That's the pink bars, which are below the zero line. But notice that the alternative markets like direct property, private equity, private credit shown here, and even infrastructure, which is not on this chart, they were able to produce positive returns in the last year. Now, private equity is a high fee area, but these returns we're showing are after fee returns. So a small allocation to private equity has been well worth it for us. So what is private equity? This is just one example of one of the funds that we invest in that's a private equity fund. It's called the Growth Fund 2, and they look for small, growing Australian companies. And they have invested in 8 businesses, which are listed here on the right-hand side. And 3 of these investments have already been sold for a good profit. And the others are mostly partly sold. So it's a very advanced fund. Now, to give you an example of the investments, GoGet is a very successful investment for this fund. It's a car sharing business, and you may have seen the cars parked on the street. They have 3,500 cars and 168,000 members that are using these cars, and the profits are growing and the value of that investment is growing for us. Moving on to an example, another example, we have Actis Energy, which is in infrastructure, and it's an example of an investment producing a very good returns for you, but also helping on climate change. Actis Energy develops renewable energy projects in developing countries. And in many of these countries, a lot of the population doesn't currently have access to electricity. Actis can build low-cost power for the people and also make a good profit for us. They made a 30% return in last calendar year. And in that year, they sold 2 businesses, a South American business to an infrastructure fund in October, and another Indian solar business to Shell in August of last year. So the South American business is the one in the middle there, and the Indian business at the bottom. Another example from infrastructure area is Melbourne Airport, which is an asset owned by two of the infrastructure funds that you invest in. Airports didn't do well in the COVID crisis because they were locked down, but they are getting back to normal. January passenger numbers at Melbourne Airport were 2.7 million people, more than double the year before, but still below the 3.3 million in January 2020. Airports have a lot of empty space around their runways, and Melbourne Airport is putting in solar panels to generate their own energy, planning to get to half of their needs by 2030. So there are many investments in the portfolio that are not only giving us good returns, but are also doing good things for the environment. Okay, moving on to the outlook for investments, there are still a lot of economic challenges to contend with. The big problem last year was rising inflation. And this caused a lot of governments around the world, well, it was caused by a lot of government programs around the world that were put in place for the COVID lockdowns, and also other factors like labour shortage and the war in Ukraine. The central banks all around the world have been raising interest rates to try and slow down their economies and bring down inflation. Our own Reserve Bank of Australia raised the cash rate on Tuesday this week, which was the 10th hike in a row. And it's taken the cash rate from 0.1% to 3.6%. And the hardship caused by those higher rates will slow the economy down and may even tip us into a mild recession. Finally, this is a long-run chart of the US inflation. Inflation was low for decades before it took off in the last couple of years. You can see it running at that 2 to 3% type range and then taking off. The good news is that inflation appears to have peaked in many countries, including Australia, on the latest number for January. The bad news is that it's still higher than the authorities would like. Just this week, the US central bank chief said that rates are likely to go higher in the US. I expect that rates may stay high until inflation comes back closer to that 3% line. I think we'll get there, but we just have to be patient and wait for that. So thank you for that, and I'll now pass over to Moya.
Okay, so thank you for joining us this evening, and it's very nice to be able to connect with you all after a few years of COVID-induced isolation. And I think it's been a hard time for many people disconnected from their family and friends, so it's nice to be able to see you in person. I'd like to share with you tonight a bit about what responsible investment means at Active Super, and also focus on what we've been doing over the past year. Responsible investment at Active Super is a combination of a couple of things. It's firstly ESG risk assessment and also active ownership. So our investments are assessed for their ability to deliver strong returns, but we also look at environmental, social and governance risk. And the first slide here shows us some examples of what we do when we are measuring ESG risk, which is a holistic review of risk and not just financial information. An example of each of these risks could include climate change risk in the environmental risk bucket. It could include modern slavery in supply chains within our investee companies for social risk. And in the governance risk bucket, it could include excessive executive remuneration and board diversity. So this is our approach to responsible investment. As I said, it's two things. It's ESG integration as well as active ownership, which is what I'll talk about later. ESG integration encompasses many things. One of those is negative screening, where our fund has done this for a long time, and we screen out companies that we believe are harmful to people and the planet. Another aspect is positively themed assets such as solar farms and wind farms, which is what we invest in. And on the right-hand side, you can see active ownership. And what that means is we engage with companies on the issues that we care about. So, for example, climate change risk. It means voting. We vote at annual general meetings for our investee companies. And it also means disclosing what we do in our proxy reports and also making our voting intentions available on our portal and website. So this slide is a little technical, but really it is the outcome of what we do in terms of ESG risk assessment. And we apply this across all of our asset classes. We review and rank all of our fund managers using a proprietary ESG risk model that we have created. And we correlate this with return. And what this says is that at Active Super, we believe that having strong ESG managers with strong responsible investment capabilities will deliver you long-term sustainable outperformance over time. And that is what we do for all of our asset classes, and we do that all year round. So this slide here is an example of some of these positively themed assets. They sit within the fixed income portfolio, the bond portfolio. We have green bonds, and these green bonds finance things such as renewables, aged care facilities, green transport solutions, and affordable housing projects, just to name a few. So now I'd just like to turn to what we've been focused on in the past year. In October 2020, the board approved a commitment to be net zero by at least 2050. And then we set about developing our policy and also our net zero model, which really is a plan to measure emissions across our entire portfolio. It's our framework, it's our pathway to meet that commitment that we have made to you by at least 2050. And so in closing, we have three targets. We have that target and commitment to 2050. We also have an interim target on a 2020 baseline by 2030. And our third target is also to have our emissions match our avoided emissions by 2030. So that brings a close to my presentation. Thank you for listening. I think we now have a short video to show you, and then I'd like to hand over to Chantal Walker. Thank you.
Long-term growth of your super comes down to having a well-constructed, diversified portfolio. But it can be hard to see exactly where and how your super is invested. Until now. At Active Super, we've created a new interactive tool called SuperView that brings your super investments to life. Using the power of SuperView, you can hover over any section to see the identity, type and weightings of your investments across a range of assets. For Australian and international equities, you can drill down on companies and even click through to see our voting history for each company at recent AGMs. When you're done, simply use the back button to return to the home screen. Want to search for a specific company? Just use the search bar over here by typing the company name or ticker code. And if you'd like to explore different investment options, simply select Change. In this video, we're showing Accelerator, so make sure you pick the right one for you. Want to switch your SuperView to see investments by country? Click anywhere in the world to see our holdings by industry, sector and company, right down to how we voted at recent meetings. At Active Super, transparency is key. We want you to know exactly where and how your super is invested. So give it a go. Check out SuperView today.
Okay, do I click? No, there you go. Hi, my name is Chantal Walker, as Moya said, so thank you, Moya, and thank you for watching the video. I too would like to welcome you all today, and as the Chief Member Experience and Growth Officer, just wanted to apologise again for the tardy experience in the beginning, and thank you for your patience, but hopefully it was worth the wait. So I have the joy of leading the team who services you every single day. And on behalf of that team, just want to say thank you again for your trust in us as your super fund. There are many ways that you can talk to us, as many of you know, whether that's on the phone or chatting in person or talking to our online contact centre over web chat. They're in Sydney, as Phil mentioned, or you can meet with our planners or our CRMs on the ground, or simply do it yourself with the app or member online. So there's many ways, and we try to ensure we continue to enhance these and improve them as we take feedback from you. So some of you may be wondering how many people did contact us last year. Well, we had 84,000 contacts with members last year. Now, that wasn't 84,000 members, because some people do call us more than once in a year, but we had 84,000 contacts. 68% of those were over the phone. And as I've mentioned, that is our contact centre in Sydney. 12% were over email. Sorry, 12% were over web chat, and 20% were over email. And email is a fantastic way that you can email us anytime, day or night. So if you suddenly think of something or you're wanting to ask a question, you can send a quick email and we'll get back to you in the next business day. So it's a great way to do it. Taking feedback from our members, we have made some changes to a couple of our services. First of all, we now offer general advice, which doesn't need an appointment and has no additional cost to you, that's available through our contact centre. We have also extended our operating hours to 6 p.m. to take, for people who work later or have different hours, to try and make it more accessible for all of our members. And we've recommenced walk-ins in our 3 offices in Sydney, Newcastle and Wollongong. And I'm very happy to let you know, because you may not know this, that we're back to 5 days a week. So Monday to Friday, you can come and see us in our offices in those 3 locations. Simply make an appointment over the phone and find a time that suits you. As Phil mentioned, we really are keen to make sure that your super fund is safe. And what we did last year is we did include two-factor authentication. It's a tricky one to say, that one, on all accounts. And we made sure that we took the retirement and defined benefits and rolled them in with the accumulation fund, so everyone uses one single log-on to get it. They get the two-factor authentication. All accounts can also get access to the app, which has that, again, same security, and which allows you to stay on top of your account, what's happening, and what your balances are. If you'd like help this evening, for those of you who are in Sydney, in Parramatta, not Sydney, we've got staff here tonight who can help you download it or get on the app if that's what you'd like. One of our key strengths as a fund is our commitment to New South Wales, and we continue this commitment to regional New South Wales in 2022. We opened up a new Newcastle office, which I know that many of the members in the Hunter region have experienced. We have a fabulous kiosk system, and I get the bing every time a member comes in, and it gives me great joy, I have to say. And we're refreshing the office in Wollongong, and we also have satellite offices in Tamworth, Ballina, Orange, Wagga, and right here in Parramatta, in fact, just next door. So you know where to come and find us if you live out west. Our CRMs, or relationship managers, who service all of these offices, as well as our Sydney-based, saw over 6,000 members last year. Some of those was in seminars or workshops or in one-to-one meetings, and are always keen to have a chat with you, to educate you and make sure you have what you need to stay on top of your super fund. We have a dedicated salaried financial planner team who Lisa, who you've met, manages, and they meet with members again, and they had over 4,000 meetings last year to ensure that our members can indeed live their best lives in retirement. And you are members in the room here today, as well as those of you online. Now, one of the exciting things that we did last year is we launched a new service called Active Super Booster. And if you haven't heard of what is Active Super Booster, it's basically a way to get money paid into your super account from shopping. And it's paid for by the retailers. And how it works is essentially what you need to do, you just link your debit and credit cards. You can have up to 9 of those linked to your Active Super account. So you can use all your families and link them in if they'll let you. And a portion of the shopping that you do, whether it's places like BWS, Iconic, Adore, Beauty, etc., a whole lot of online or in-store, goes into your super account automatically. So it's a great way to get some extra money into your super with doing what you do today. The good news is you can also still get your frequent flyer points if you're into that. So simply go online and sign up. And again, we'll have staff here this evening who can help you set that up if you'd like that. We're also very aware, as you've heard Craig talk about the economy, and people are doing it tough. Economy is tough at the moment, and we're constantly looking for ways to give you more ways to save money, whether that's through health insurance, whether that's through discounted rates through GoGet. You heard Craig talking about them as we invest in them, but that allows us to also give you the benefit as a member to get them at a discounted rate. Or you can get 15% off at some fabulous restaurants, which are mostly in the Sydney area, but also in Canberra at the War Memorial, or Rain, which is the QVB, which is a fantastic one, or the Tower one that goes around. I mean, you literally get 15% off food and drinks. So if you'd like to know how to do that, just go online and it'll tell you how to do that. So in closing, we really do encourage you to stay active within your super. It's part of our DNA. It's what we do. We want to help you make sure that you can live your best life. For those of you who are in the room today, we do have lots of staff here today, as Phil mentioned. We've got little booths set up there to make sure that you can make sure we understand who you want your super to go to in terms of your binding nominations, because these do expire every 3 years. If you want to sign up to Active Super Booster, or simply get online or learn how to download the app, we can help you with that this evening. And for those of you online, our contact centre is available Monday to Friday till 6 p.m. as I mentioned, who can help you with any of these as well. So I might hand back to Lisa now for Q&A.
Thank you, Chantal. It is now time to open up for questions. So this Q&A session is a chance for you to ask questions about the fund and super generally. Thank you to all of those who have submitted questions along with their registration. So where possible, we have attempted to integrate these themes into the presentations themselves. For this evening, please note that we can't address questions that do relate to your personal situation. So if you do have such a question, please reach out to our member care team, who can help put you in touch with the correct person to assist you. If you have submitted a question with your registration that related to your personal situation, you should have heard from us by now. Otherwise, we will be shortly in touch. So if you are joining us online, you can ask questions using the Ask a Question function that is available at the bottom of the pane. For those here with us this evening, however, please put up your hand and we will bring a microphone around to you so that people online can hear your question, and I'll repeat questions for the online individuals as well so they can hear. To start us off, I'll ask a couple of the questions we have received prior to today. I will welcome the speakers up onto the stage. Thank you. All right, so the first question I will have addressed here is one for Craig, and this is a question we received through with a registration from one of our members. So the question, Craig, is please explain to AGM how active super investment returns have performed against industry fund benchmarks over the last 1 to 10 years.
Okay, Lisa. The 10-year return for active super balanced option, I can tell you, is ahead of the median fund, and that's running. That ran at a rate of 7.51% versus the median of 7.5%. And I can tell you that the Active Super Board does have a desire to see that our products are ranking slightly higher against the peers. But I will note that it can be difficult comparing individual funds, because even within the same grouping, you can have funds with different levels of risk. At Active Super, we try to take a diversified approach with low volatility, which gives us a good risk-adjusted return. And I can tell you that the investment committee and the investment team are committed to working hard to always improve the outcomes for the members.
Thank you, Craig. So the next question we received through registrations I'll address here is one for Moya. Thanks, Moya, in advance. Moya, when will Active Super truly become a leader in sustainability by divesting from fossil fuel investments?
So thank you, Lisa, and thank you for the question. It's a very good question. This fund has had a very long history in sustainable investment and responsible investment, having identified climate change risk very early. And because of that, it has a low carbon footprint, a much smaller carbon footprint than most superannuation funds. We apply a very nuanced approach with careful assessment of companies, and some are involved in the transition. And what I mean by that, the word transition, is that we are going from a high carbon economy to a low carbon economy, and that is the transition. We want to be invested in that, and we need to assess companies for that. And if they are involved in that, we would like to be owning those companies. We focus on companies that we engage with companies in climate transition action plans. And of course, if we don't see action over time, then of course that becomes a case for divestment of that particular company. But by not owning companies, it does not give us the right to engage or to vote or to support any shareholder action where there can be effective change. So we may miss out on optimising returns by divesting of those companies.
Thank you, Moya. So I'll keep going with our questions that came through from the registrations. Craig, the next question is for you. Craig, how would you go about regaining the #1 position in MoneyMag for best ESG super product?
Thank you for the question, and thank you, Lisa. I would say our objective is to deliver strong long-term investment returns to the members using responsible investment and trying to reduce the ESG risks in the portfolio as much as we can. So while it would be nice to be awarded the #1 position, it's not the main driver of what we're doing. It's more about delivering those strong returns using responsible investment.
Thank you, Craig. I'll mix it up a little bit now. Here's one for you, Phil. So, Phil, the question is, have there been any changes, and what is the forecast on this front going forward on fees charged by the fund?
Thanks, Lisa. And that's a good question because fees are important to everybody. And Active Super, we strive to ways that we can through to fees. Question related to some. And then 30th of June. So again, I just want to
And Phil, we have had a question through the broadcast, so in relation to fees as well. So the question relates to how we compare to other funds, and would you like to address that?
So going back. So when you compare that, we show and it shows that we're a little bit below the median across the industry as it comes to fees, but it really does depend on what product you're in and so forth. But generally speaking, because of the active approach we take and the strong regional service delivery, the strong regional the strong regional service delivery means that we're not the cheapest in the market, but we certainly strive to be good value for money.
Thank you, Phil. And just a reminder, if you do wish to ask a question online, there is the Ask a Question function at the bottom of the pane. So also I'll encourage our members here in Parramatta, if you'd like to ask a question, please raise your hand. And we have a gentleman here who would like to ask a question. Yes. The microphone is coming around.
Okay.
I just asked the chair, I just wondering whether the cyber security is a problem when you consider the likes of Optus and Medibank Private.
I'm going to hand over a bit of the detail of this to Phil. But from a governance point of view and from a point of view, cyber security is one of the worldwide and national and biggest risks to manage. And it's right up there in top of, at a board level, of identifying the risk. And there's lots of detail about how we manage that. The whole board took part recently in an example event of a pretend scenario of a significant cyber attack and how we manage that. And that's best practice at a board level all over the nation. And I'm very comfortable with our preparedness, but I'm also uncomfortable in that the dark side, these people like the Darth Vaders of the world are really smart and innovative, and they're always going to try and have a crack. So we're never going to be, if you think you got it perfect today, it changes tomorrow. So we need an ongoing risk management system in cyber of continual improvement. But I just want to assure yourself and all the members here, and Claudia here, Claudia Bell's our risk manager, it's right there in identifying that risk to manage. I'm going to hand over to Phil to go into a bit more detail of that. But I just want to assure you at a board level, it's one of the most important things on our minds.
Yeah, so I'll just go a little bit more into some of the things we do and also some of the things you can do as well, more generally. But as Kyle has said, it's such an important topic right now, and will continue to be going forward. And so we've had to increase our investment and our time and our education in making sure that the standards are as high as they can be. And we're looking after not only security in terms of the cyber security, but also data privacy more broadly. Kyle mentioned some of the things we're doing, for example, having scenarios. And from a if something did happen, how would we respond to that, and what actions would we take to protect our members and to sorry. Look, I couldn't really answer that question. I don't believe anything is. What I'm referring to is preventing unauthorised access to your accounts and making sure that your data is secure. So we also work with third parties. So your accounts are administered by a third party, and we look at their security and ensure that their security is strong as well. We talked about two-factor authentication or multi-factor authentication when you're logging into your account, and that's an important barrier to make sure that the person that it's you actually logging into the account. And there's a whole range of other things that we do internally, like training. We're continually training staff, because a lot of these events start with what you'd call relatively simple issues. So somebody who gets an email and clicks on a link, and then and then something infects your computer. In the same way that affects you at home. And so turning to what you can do to protect your site from cybersecurity and from these sort of situations is that, and we've held seminars on this for members, so we're trying to help educate and make sure members are well equipped to deal with this as well. And it's the sort of stuff you hear about, and it sounds simple, but it's making sure you've got really good, strong passwords, you know, with and that are not shared with anybody and are difficult for these algorithms and machines to hack into. It's making sure that you don't click on those links and you're really aware of the sorts of things that anything that could be sent to you. And if someone rings you, making sure that you go and call back, or you know, so that you're not you're making sure that if someone approaches you, that you're actually talking to that organisation. And so they're more general things. And so there's a whole range of things we're doing to ensure that you know, that we're doing as much as we can to prevent those sort of breaches.
Thank you. We do have another question from the audience.
Hello, Lisa. Leon Patterson.
Hello, Leon.
I did send a question through online, but you may have it. It's regarding the binding nomination. I've got that in place. Should I die, is there any delay in the pension being transferred over to my wife?
So in relation to, so we can address binding nominations generally as a factual question. So the question from the audience was in relation to binding nominations, and is there any delay from an administrative process if a member was to pass away? So I can address that if you'd like.
Yeah,
of course. Okay, so essentially it's very important to for members to have a binding nomination in place or have their wishes in relation to their super in place. And if there is a valid nomination at the time of a member's passing, then basically the beneficiaries would then contact and have the opportunity to contact the fund. And at that point, we would discuss what is required, but we do have a team of people to assist and make the process as smooth as possible. There can be sometimes delays depending on the complexities of the situation and whether there's a valid nomination in place at the time. But it can sometimes take some time, but we do have a team of people here on the ground to assist with you to make that process as smooth and as helpful as possible in that time. So we've got another question.
Nish Singh from Blacktown City Council. If you don't have a nomination, what happens then?
So in relation to if there is no valid nomination at the time of a member's passing, it is up to its trustee discretion, and there'll be a number of factors applied, but it's a trustee discretion at the time as to what happens with the benefits, and there are certain rules as to how a benefit can be paid and to who a benefit can be paid at the time of a member's passing.
We've got a lot of forms at the back with envelopes. If you don't have yours up to date, which we can help you with this evening to make sure that it is up to date, if you haven't done that already.
I've actually got a couple of questions. So in terms of, I mean, anyone who's worked in local government knows that the average age is much higher than other industries. So as members retire, I'm assuming that they'll be drawing down more on their super balances. So I'm wondering, merging with a Victorian super fund in a similar position, what will that mean for the sort of younger members who are going to be contributing while the fund is sort of being drawn down? So that's my first question. And the second question is around the TPD and the death insurance coverage. I notice there's differential rates between men and women for both those categories. I'm just wondering, you know, in the spirit of equity, why they're different.
I'll take the first question. So thank you. Whether we merged or not, it's the same scenario. You've identified how important it is to continue to grow and find new members, possibly within local government, but more likely beyond that, across a whole range of different ages and work experiences and industries. So we're really excited by the merger because it automatically gives you a lot more strength. But in the end, that isn't good enough on its own. You have to be a fund good enough to not only look after the current members, but as you identify, they're going to retire. So unless you're continuing to grow and find new members, then it's going to get really challenging. So, and the solution to that, man, there's not one answer on the recipe for that. You have to have better than average in terms of the superannuation and the advice you do and all the basics. You have to manage your cost base, but you have to grow. So you have to retain as many members as possible, and you have to fund as many new members, which then de-risks the scenario that you've identified. So that's been on our minds. And in part, I mentioned earlier, the rebrand was in part to manage that risk. So because the local government brand was incredibly strong within local government, but it wasn't incredibly strong in industries beyond that. So part of our opportunity was to find a brand that could look after still the interest of local government, councils themselves and their employee and our members, but also many industries beyond that. And that's proven to be a successful strategy. So it's a great question. Thank you. Phil, I'll hand over to you for the second one.
Lisa, the second one?
Yep.
Sure. Just in relation to insurance, there are different situations with females and males, and it relates to the cover from the insurer as well. So there are differences with males and females and longevity rates, and we will address that in complete detail within the minutes provided following this meeting. Do we have any more questions in the room? Yeah, sure.
Just to know the properties that you invest in, what properties are they? Are they housing or is it to do with hotels, offices or things like that? I just wondered what kind of properties you invest in.
Thank you. I believe that question's for Craig. So Craig, and for everybody online, the question was relating to the types of properties we invest in. Is it housing and other types?
Yes, thank you for the question. Yes, we do manage a portfolio of properties ourselves with an internal team, and that is properties in the range of $50 to $100 million worth of value. It's office properties, it's shopping centres, it's industrial estates, and we also invest in externally managed funds. So one by GPT, one by Investor, and so we have a whole range of different types of properties. Within the property area, we don't have any residential at this point, but there are other areas of the portfolio where we invest with managers who provide finance to residential developers. So we are participating in that to some extent. And so, you know, we have a good range right across the property spectrum.
Okay, we do have another question. Craig, you're very popular in relation to questions. So we did have a question with another year of negative returns, currently minus 0.4% for the last month and 0.77 for the last 12 months when the bank's paying 4.6. Why should we put money in super?
Yes, well, as we said, super is a long-term investment and there are fluctuations along the way, which can be painful. but we believe it's important to look at the long term where we expect the markets to trend upwards. And while the return for the current 12-month period might be still negative, as we've shown tonight, for the 8 months of this financial year, we're showing good positive returns. And we expect that the outlook into the future is going to be positive. That's what it's always been. As long as our economy is managed properly and our companies are doing well, then we expect that we'll get a positive return for you.
Thank you, Craig. And we are closing to the end of question time, but we do have another one here for you, Craig. And it is, have you changed any investment strategies in response to poor returns due to COVID?
Right. Yes, unfortunately, we weren't able to predict the COVID crisis, but there has been changes really since the COVID crisis, which, as you remember, it caused a fall in the market, which presented opportunities for us to make new investments to take advantage of those cheaper prices. So we did that by increasing our investments to the share markets when the prices fell, and that really resulted in very good returns for the financial year to June 21, as you'll remember, and then it's turned down again since then. So, there was, firstly, we were pleased that our defensive portfolios held up pretty well in that COVID period, in that the market fell substantially and we still had a positive return for our conservative balanced. And we were able to take some advantage of the cheaper prices for the next year.
Thank you, Craig. And we will close off. We'll have one more question to close off. This one, I believe, is for you, Phil. Does the fund see any negative implications regarding the federal government's intention to raise the marginal tax rate on accounts above $3 million?
Okay. So the question is, is there any negative consequences? I think that, look, we're hearing about superannuation in the media a lot recently, and I think that goes to just how important superannuation is to the economy and to all of us. And, it's worth noting that the superannuation system in Australia is a world-class system. And really is the envy of around the world in terms of the system. Generally speaking, there's been quite a few changes over time. This one, it's very early, and so there's been some policy announced. It's very difficult to assess what impact that would have until you get into, you actually see the specifics and the detail. But look, I wouldn't anticipate that having any major consequence for us at Active Super.
Thank you, Phil. And we have run out of time, so I will wrap up. And just a reminder that any questions we have not addressed today, as I mentioned before in relation to a question, we will respond to those questions in their entirety within the minutes of the meeting, which will be published on our website within 1 month. A reminder, if you do have a question, please reach out to our member care team in the first instance. So as Chantal explained earlier, our member care team can be accessed a number of ways, and in particular on the telephone between 8:30 a.m. and 6 p.m. Monday to Friday. For those of us here in Parramatta, we welcome you to join us for some light refreshments and to learn more about getting active with your super at one of our information desks. So we do appreciate your engagement and your patience tonight. So thank you for joining us, and good evening.